Lal PathLabs reported a decent set of numbers. We are now joined by the management of the company, Mr. Bharath Uppiliappan, Chief Executive Officer at Dr. Lal PathLabs. Hi, sir. Good afternoon. Thank you so much for speaking with ET Now. Let me begin by asking you about the fact that this quarter was quite decent. Going forward, what kind of growth can we expect, and what could be the factors that will support this growth going forward?
We had a very good and encouraging Q3 for three primary reasons. Number one is that we are able to serve 6.6 million patients, recording a revenue of 497 crores. But more importantly, our non-COVID growth rates came to 28% and COVID contribution only at 12%. This is a very encouraging trend for us because we have always been focused on a non-COVID growth trajectories coming back to our pre-COVID levels. The second reason the quarter was very encouraging is that we were able to welcome Suburban Diagnostics into the Lal PathLabs family, and this allows us an opportunity to build our business in the west of the country in a very significant manner. Suburban Diagnostics is a very strong consumer-facing brand, and we hope to work in partnership with this brand to take our business and serve more patients in western region of the country. The third reason, which is that our long-term enablers for growth are all, progressing really well enough. Be it technological interventions, be it our network expansion strategy, be it our capability building areas which we are focused on. So all the long-term initiatives are really, going as per plan, and we feel very confident of coming back to our pre-COVID growth rate levels as soon as the pandemic kind of wears off, which it is showing signs of wearing off.
Okay, actually, I wanted to talk about the point that you just made regarding the non-COVID portfolio. What should we expect in terms of growth there, and any guidance if you can provide us with any sort of number projection?
Right. Our non-COVID growth rates, which we have always wanted to come back to, is our pre-COVID mid-teens levels. And that is what all our actions are focused on to get that number back as soon as possible. So a lot of our actions are focused on building our rest of India growth rates, strengthening our core market of Delhi, putting in place technology interventions so that we are able to seamlessly offer an omni-channel experience to all our patients.
Okay, so that is as far as top line is concerned, Bharath. But what about the margin? Because this quarter we have heard from a lot of managements that they're seeing the margin pressure come by. There is the labor cost on one hand, and the raw material price inflation is there. Are you also feeling this heat? And what would be your comment regarding the margin pressure going forward?
I think one of the key variables in our business is the people cost. And as you rightly said, given the external environment, there is some inflationary pressure we are seeing. However, like in the past years, our first endeavor would be to get operating efficiencies and leverage before we start to take any other action around pricing. But that is an action which we will not exclude at this point of time. We will wait and watch for the situation to evolve. We will try and get the operating efficiencies up. But yes, inflation is something we are really keenly watching as an input cost going into our business.
Okay, Bharath, we will let you go on that note. Thank you so much for making the time. Appreciate you joining us on the show here.